Assalamu alaikum friends. Welcome to this video in which we shall discuss the payroll related current liabilities. So these kind of liabilities relate to the salaries and wages which a company pays to its employees. And a unique feature of these liabilities is that these are usually accrued every month and subsequently they are paid. So in most of the corporations, they are accrued at the end of the month and then they are paid uh, in the subsequent month, in the first or second or third of the subsequent month. But sometimes it's also possible that they are accrued on the same date and they are paid on the same date. But still, then they have to be accrued, means that we have to record them as current liability and then we have to set off the current liability against the cash payment. So there are few points which have to be noted before we move on to the core accounting for payroll related liabilities, is that the employee's take home salary is less than gross salary. So if an employee is paid a gross salary of say 10,000, then usually there are some deductions from that salary. So his take home is less than 10,000, maybe something around 9,000. So usually the deductions may approximate around 15% or maybe more or less than that. Another important feature to note is that from the employer's perspective, the cost of an employee to the employer is more than the gross salary. So if the gross salary is 10,000, and although the employee gets just maybe 9,000, but the expense for employer is more than 10,000. So say it's 11,000. So eventually employer pays more than that. So then where does the difference go? So employer pays 9,000 to the employees, but remaining 2,000 in this particular case, when we assume it is 11,000 payment on the part of the employer, 11,000 is the expense. So the employer pays 2,000 to other agencies, usually government agencies, related to the taxes. So these are the two aspects of payroll which we shall see in the accounting part of the payroll. So here is an example that if gross salaries are say 10,000 US dollars per month, employee will get say USD 8,000 as a net salary, but employer will record an expense of 11,000, right? So these are the two aspects which we are going to cover in detail. So why this is so? So number one, why employee gets less than 10,000 because there are certain payroll deductions. So when the employer pays salary to employee, the employer doesn't pay full amount, but employer deducts some amounts towards meeting some other liabilities on behalf of employee. So we shall see how to account for them. So for example, one of the very frequent deduction is the deduction for the tax, income tax. So since employee is earning salary, it's employee's income. So usually the government agencies bound the employer to deduct the employee's income tax from his salary and deposit it to the government treasury. Okay, so we were discussing the payroll related liabilities and the payroll deductions. So we were talking about the payroll deductions. So this is one deduction. There are other deductions as well. Similarly, uh, there are certain taxes imposed on the employer as well, related to the employees. So, and these are actually the taxes which employer pays on behalf of employees from its own pocket over and above the salary. So for example, certain countries regulations require that the employer pays social security contribution for their employees so that the government can arrange for social security welfare activities for the employee. So this means that if employer is paying $1,000 per employee, then eventually the employee is costing the employer $11,000, 10,000 for the salary that it pays, out of which 8,500 will pay to employee, 1,500 it will pay to the government agency on behalf of employee, and 1,000 more it will pay to, for example, social security and things like that. So these are the two concepts which we are going to demonstrate now. So it says the company's report is a current liability, the amounts owed to employee for salaries or wages at the end of accounting period, right? So salaries payable or wages payable is actually the net salary which is supposed to be paid to employees. And of course, there are certain payroll deductions have to be accounted for. So some of the payroll deductions are social security taxes, for example, right? And some of the payroll deductions are income taxes. So social security taxes are of two types. One, social security taxes is deducted from the employee's salary, whereas another social security tax is actually paid by the employer over and above the employee's salary, right? So we have to record both, and we are right now we are talking about the first one. Similarly, income tax withholding. So as we just discussed, the income tax has to be withheld. So here is an example. Assume the company records to payroll for the week as follows: salaries and wages expense, and salaries and wages expense is 10,000, but the salaries payable is actually 7792 because there are certain deductions. Again, these deductions from the employer perspective, they are also liabilities. So income tax payable, this is the liability we will pay to the government. Social security tax payable, this is the liability we will pay to the social security institution. Union dues payable, this is the liability which has been withheld from the employee's salary, which we will pay to the union officers. And the net salary payable to the employees is actually salaries and wages payable level 792. Eventually, when we pay off these salaries, so this is the entry: salaries and wages expense payable. Say wages payable and cash credit, right? So this completes the one part. And of course, when the other liabilities, like for example, this liability, income tax payable and social security payable, these are also eventually paid, and whenever they will be paid, they will be debited and the cash will be credited, right? So this is one aspect. Now see the other aspect, the employer taxes. As the employer, the company is also required to pay social security taxes and often other taxes as well, referred to as the employer payroll taxes. So how does it record it? Again, it record another expense, which is payroll tax expense, right? So see in the previous slide, it was salaries and wages expense. Again, this was an expense for the company, and this is the wages related expense, which is payroll tax expense, and which is debited, and social security tax payable, which is credited 800. So this is the amount of the social security tax which the employer has to pay over and above the employee's salary, whereas the previous social security tax payable was actually 800, which the employee had to pay. So eventually, how much social security tax is payable is accrued: 800 over here, 800 over here. So eventually, the government, the company will pay 1600 to the social security institution. And of course, if there are some bonuses, so there are no deductions from the bonuses, usually no such deductions. So salaries and wages expense or bonus expense, sometimes the companies keep the bonus expense separately, and salaries and wages payable or bonus payable credit, right? So and then eventually when we pay, so payable is debited and cash is credited. So keep in mind now the types of deductions over here differ from country to country so far as the taxes are concerned. Uh, but again, there are some more deductions which are not taxes, but which are for the retirement benefits. So, for example, we may deduct certain amount from employee's salary uh, for provident fund. So, in that case, we credit the provident fund payable, and that provident fund payable, for example, assume that $792 over here is further withheld from employee salary. So 792 payable, $792 will be credited to the provident fund payable, and this will be a liability for the company, and this will usually be not a current liability because this has to be paid when the employee will eventually retire. So this is usually known as a deferred liability. So, and the wage salaries and wages payable will become 7,000. So these kind of retirement benefits can also be deducted from the employee salary, and it by itself, the retirement benefit itself is a very huge accounting topic, and there is a separate accounting standard, separate accounting standard dealing with the retirement profits, which is not being discussed here. So superficially, there are two types of retirement benefits. There are defined benefit plan and there are defined contributions plan. But again, the discussion of these is actually beyond the scope of this current video. So, but to identify, the purpose was just to let you know that apart from the taxes sort of deduction, so these are sort of a taxes: union tax, social security tax, income tax, but there may be other deduction for employee, which is the provident fund payable or thing like that. So hopefully this will be helpful in understanding the basic of the current liabilities.